The Australian dollar rose above 72 cents this week for the first time since the 4th of January, when Chinese market turmoil kicked off a steep decline. There was support in the week from iron ore prices, with the spot price rising 9% to above $45 for the first time since November. There was also support from a rally in copper prices. And in the background, we've also had a bit of support for the Australian dollar, at least perhaps a bit more with an eye on the longer term, from the Bank of Japan's surprise switch to negative interest rates on a portion of deposits held by commercial banks with the Bank of Japan. While price action on the yen has been quite mixed, we do expect that the Aussie dollar will draw some support in coming months as money leaves Japan. As we suggested last week, there was also some support for the Australian dollar from a calmer tone to Chinese markets, as authorities kept markets fairly stable ahead of next week's Lunar New Year holidays. The RBA, however, wasn't quite so helpful to the Aussie. While it did hold rates steady, there was a slightly more concerned tone about the growth outlook. Markets continue to price substantial risk of another rate cut from the RBA this year, with a 60% chance of a cut by May. The main driver of the Aussie dollar gain this week came when the US dollar suffered its largest single daily fall since the global financial crisis. The US dollar got pummeled as a services sector survey slumped to a 2-year low, and federal officials sounded less inclined to raise interest rates anytime soon. In particular, New York Fed President Bill Dudley indicated that he was growing more cautious about the implications for the US economy of the global financial instability. Markets are now not pricing another increase in the federal funds rate until the middle of 2017. This is in stark contrast to the Fed's December 2015 meeting, where they projected 4 rate hikes over the course of 2016. The Federal Reserve will remain the focus for global markets in the week ahead, when Fed Chair Yellen testifies before Congress. We expect her to take a fairly cautious line on the outlook without altering the overall expectation that rates will rise at some time. This is likely to further undermine the US dollar, though probably not as dramatically as we've seen in the past few days. In terms of local events for the week ahead, we'll get updates on Australian business and consumer confidence. With Lunar New Year keeping Chinese markets closed, we expect fairly calm sentiment at least early in the week, and that's likely to support the Australian dollar. And with the US dollar on the back foot, we may well see the Aussie test the 73-cent level we saw at the very start of this year. But multi-month, we still see risks for the Australian dollar tilted to the downside. Commodity markets remain amply supplied, so pressure is likely to return to prices. The US dollar is also potentially a little bit oversold, with too much gloomy news priced in for the US economy. So we still see the Aussie dollar trending towards, say, 68, 69 in the second quarter. We'll speak to you next week.